Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. Real estate investment trusts, REITs for short, like National Retail Properties Inc., traded on New York Stock Exchange under symbol NNN, have faced headwinds from the Federal Reserve's aggressive rate policy. Since March 2022, the Fed has raised its key interest rates 11 times. Why is this bad for REITs? Higher interest rates make it more expensive to borrow and service their debt. It also weighs on their profitability. The outlook for REITs of all stripes got a little more rosy on November 1st. That's the day when the Federal Reserve announced that it was pausing its interest rate hikes. It is expected to hold its interest rates steady when it meets in the next meeting in December. Perhaps, and coincidentally, that was also the day when NNN REIT reported strong third quarter results and increased its full year guidance. It was win-win day for NNN REIT. John?
Yeah, thanks, Mo. National Retail Properties, as you already noted, is a REIT. It acquires, owns, invests, and develops high-quality properties that are leased to retail tenants under long-term, like 15 to 20-year triple net lease contracts.
And John, I think before we go into any details, it's important we talk a little bit about what is a triple net lease.
Yeah, well, with a triple net lease agreement, the tenant is responsible for all expenses. This includes real estate taxes, building, insurance, maintenance, rent, and utilities. In essence, National Retail Properties banks the base rent and has no obligation to spend money on the properties or operations.
Why would anyone sign up for a triple net lease?
Well, there's a lower initial investment in a triple net lease property, which means National Retail can offer its tenants lower rents. This translates into lower occupancy costs for retailers. Don't shed a tear for National Retail Properties. Contractual rent increases are actually built into the leases.
Okay, now let's get back to the National Retail Properties. What did they do?
Yeah, the company has a pretty big diversified portfolio made up of 3,511 properties across 49 states, and it leases its properties to 395 tenants in 30 plus lines of trade. The aggregate gross leasable area is approximately 35.8 million square feet. To put that number in perspective, that's equal to around 622 NFL football fields. Some of its biggest tenant bases include convenience stores, automotive services, and restaurants, both full service and limited service. And I think most people would recognize some of their bigger tenants: 7-Eleven, Dave & Buster's, Mr. Car Wash, Sunoco, Walgreens, and Wendy's. Now, despite concerns about the retail environment during the 2020 health crisis, national retail occupancy was excellent. In fact, from 2003 to the third quarter of 2021, National Retail's occupancy never fell below 96.4%. Over the same time frame, the REIT industry average never rose above 93.7%.
John, I was reading on incomeinvestors.com that this REIT reported strong third quarter results and raised its 2023 guidance.
Thanks to its diversified real estate portfolio, National Retail REIT continues to generate a high amount of earnings. The third quarter of 2023, the company announced that its revenues increased 6%. Net income was up by 20.7% year over year. Funds from operation declined 5.3%. Core funds from operation advanced 5%, and adjusted funds from operation advanced 3.7%. During the quarter, the company maintained a high occupancy level at 99.2%, with a weighted average remaining lease term of 10.1 years. National Retail REIT continues to have a strong balance sheet with $98.3 million of cash and no amounts drawn on the $1.1 billion bank credit facility. And as you noticed, commented about their guidance. Following a record 2022, management expects to report an even better 2023. Core FFO guidance for the year was increased from a range of $3.17 to $3.22 per share to a range of $3.19 to $3.23 per share. Now, in 2022, the company reported core FFO of $3.14 per share, and the 2023 adjusted funds from operation is estimated to be in the range of $3.22 to $3.26 per share, and that's up from $3.21 per share in 2022.
Here's something that income investors will like. This company increases annual dividends for 34 consecutive years.
Yeah, National Retail REIT is one of only 3 publicly traded REITs to have increased its annual dividend for 34 or more consecutive years. NNN REIT is actually home to the third longest dividend increase of all public REITs and 97% of all New York Stock Exchange listed companies. It also has a 5-year average dividend growth rate of, I think it's 3%. Now, most recently, in October, the company's board announced a quarterly dividend of 0.565 per share. That equates to $2.26 per share on an annual basis, for a profit yield of 5.42%. Chances are good. National Retail will increase its annual dividend payout for a 35th consecutive year in 2024. Not only did it increase its guidance, it has maintained a conservative dividend payout ratio of just 68% of its adjusted funds from operations. Moreover, the company has a 39-year track record of operating in all economic environments.
Its stock has been ripping higher since November.
Yeah, the combination of strong financial results, increased guidance, and a dovish Federal Reserve has helped juice NNN REIT stock. Since the start of November, National Retail stock has rallied an impressive around 15%. The outlook for National Retail looks solid, with Wall Street analysts providing a 12-month share price target of $47 to $52. The higher projections would put National Retail stock above its February 2020 pandemic record levels of around $50 per share.
John, thank you so much for your insights. Just to recap, National Retail Properties, Inc. is a great REIT with a high-quality, broadly diversified portfolio, strong acquisition strategy, continued high occupancy and rent collection, and reliable cash flow. All of this helps it produce safe and growing high-yield dividends and stock market gains. It has raised its annual dividends for the last 34 consecutive years, and its shareholders have enjoyed annual total returns for the past 30 years of 11.1%. To put that in perspective, over the last 30 years with dividends reinvested, NNN REITs have returned total profits of 2,119%. That's it for today. And make sure to go to incomeinvestors.com now to get our free special reports on our top 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.